they all put themselves into a death spiral that you can't get out of, because you start a business, you make a commitment, you quit your job, and now you've got one small limit business credit card and you need 200 grand more than you thought you did. So you take all the equity out of your house, you toast your personal scores because you max your cards out. With a little bit of pre-planning, we're talking about 10 times the amount of funding capability with the same personal score and a few months worth of work. Absolutely ludicrous that you would not do it. They should teach this, basic fundamental 101. Get incorporated, get some business credit built, get some large limit business credit cards, and put together the funding capabilities that's like 5 or 10 times more than you think you're going to need.
And it's the frustration with the YouTube University is we have all of these people out there purporting to be experts because they did it one time for themselves, and they're like, this is going to work for everybody, and it works for nobody.
And most people are not that dumb that they're going to see a guy that's, borrowed a Lambo or some Bentley with some spinners, and I got $1 million in business credit, do it my way. Most people are not that dumb. It's kind of the middle of the road people that purport to be experts, right? And where the difference though is they don't have any baseline for concepts. They're just literally either Googling it themselves or done it for one or two people, and then they're saying that they have this information. How could you, if you've not built the business credit for tens of thousands of clients, where's that information coming from? How do you know? So far, what have you learned about business credit? What's your first impression?
First impression, it's almost like magic. Getting credit assigned to a business that is non-personally guaranteed frees you up from any liability and gives you access to all these different kinds of credit as you build it up. Something that I had no idea about before starting here, honestly. And it's the ability to leverage that into better equipment, better marketing, whatever your business needs. It really does feel like magic. There's a lot about the non-personal guaranteed part that I think people don't understand. And frankly, I feel like I don't understand all of it. A lot of people, when they're calling in and they're saying, I have really bad personal credit and nobody's approving me, I don't know how I'm going to get any credit. They have no idea about, non-personally guaranteed credit. And how we get them started. So maybe, for me and the listeners, you could say a little bit about what is non-personally guaranteed credit and why they should have access to it.
It's the foundation of how to run a business. It's the most crucial, the most important thing that you can do. And if you take the super successful or anyone, they're going to have corporations that are set up. Any big company that's financially stewarding their success is going to leverage business credit. So what separates us when it comes to business credit from most people are going to be exposed to, especially now the last 2, 3, 4 years, and you've heard this quite a bit already. And we see some of these clues into it, like the vendors they buy from or whatever it is. And so there's a confusion part of it, like, why are they calling us? Like, what's going on here, right? Maybe they've been buying from a bunch of vendors or $500, $1,000 into this thing. It's horrific if it's a real business and they're creating multiple files and they're doing all the kind of YouTube, TikTok type business credit builds. I think it's the most fundamental core thing to understand about how much different we are than that type of process. But so what are some of the fundamental things that we do different, just with janky vendors and some of our terminology?
Well, I think one of the big things that makes us different is that we aren't cued into an agenda where a lot of the people that our clients are encountering are basically trying to get them down the road of stacking or revenue loans because they're looking for the big commissions. Whereas our program is really going after helping the individual business and really tailoring to what's going to benefit them rather than, just the one thing that we do is get revenue loans. And so let's just shoehorn them into that.
Right. So it is the absolute smartest thing a business owner can do. There's no question about it, right?
But also kind of going back to what you were talking about with the magic and the no PG and how people don't understand it, there's also another aspect to it that goes beyond even, a person who has bad personal credit and it's the only option that they have, is the good person with good personal credit that doesn't understand no PG credit.
For sure.
And how that benefits them because what will happen is the good personal credit person will go out there and destroy their good personal credit unless they have somebody like us helping them and consulting with them and teaching them how to leverage the no PG credit to preserve their good personal credit.
And they all do it.
Oh, wow.
They all put themselves into a death spiral that you can't get out of, because you start a business, you make a commitment, you quit your job, and now you've got one small limit business credit card and you need 200 grand more than you thought you did. So you take all the equity out of your house, you toast your personal scores because you max your cards out. With a little bit of pre-planning, we're talking about 10 times the amount of funding capability with the same personal score and a few months worth of work. Absolutely ludicrous that you would not do it. They should teach this, basic fundamental 101. Get incorporated, get some business credit built, get some large limit business credit cards, and put together the funding capabilities that's like 5 or 10 times more than you think you're going to need.
Yeah, and it sounds great. I mean, it sounds almost too good to be true. Are they charging ridiculous amounts for interest, or why?
No. I mean, so fundamentally, if I have decent personal credit, right?
Yeah.
And there's two options. Like I go to look for money, I get a hold of a credit card stacker. We'll go over that whole concept.
Yeah.
Right. Or I go get 1 or 2 business credit cards. And so let's say I have $5,000 personal credit cards and I get a Chase Inc. credit card for $5,000, right? So in 3 or 4 months down the road, I've maxed that Chase Inc. credit card out. I get a Capital One Spark card, and that's the one that reports on your personal that is the most suggested by the internet, right?
Yeah.
So I have no business credit built, and then I start using my personal credit cards. So my 770 is now 650 because all my personal credit cards, let's say I have 70,000 worth. They're all maxed out, and nobody will touch me. I have no business that's fundable, no business credit. My business credit cards are maxed, my small, tiny one. Now so that's a death spiral, right? So then you go out of business. You take an MCA loan, but this is the layers of it. Now you take an MCA loan because you have a little bit of revenue. You're doing 5-10 grand a month. You take a 500% interest loan because of the bait and switch nature of business lending and how it works right now. And now you're in really bad shape. The same person in the same, let's say 12-month time frame. They built business credit first and they kind of wait. You know of a coworker who does not have their company set up yet, that's personally guaranteed a $50K Chase Inc. card that's in their 20s, has not even started their business yet. So why would that same person with like 3 or 4 months worth of diligence, now they get rated with Dun & Bradstreet, they set up themselves up for all sorts of funding capabilities, but starting with just the business credit cards. So instead of $5,000, it's $45,000.
Yeah.
One card, which is almost all of their personal credit cards combined. Now they don't have a bunch of inquiries either, right? So they start their business, they go, oops, I need more than $45,000. Now they have one inquiry and their business credit is stronger because they've laid all the groundwork. They've got all these vendor accounts, they've got trade lines, they're rated with Dun & Bradstreet. They'll go get one more for $50,000 and get a little bit of revenue. Now you get some fintechs, and fintechs are some of those hybrid lending products. And so,
and how does that fintech work? When you
let's say
hybrid?
Okay, so American Express bought a company. A typical one people would have heard of is called Cabbage, and so they're sort of revenue based, but they're not MCA loans, and so they're not. Yeah. They're going to be more along the interest rates of credit cards, right? Now the business credit cards are going to have 18 months no interest. So they're great in the beginning, right?
Yeah.
But the difference between a 500% 3-month loan and a Cabbage loan. So American Express bought a company like Cabbage. They'll hook into your Plaid. They'll look at your business checking. They'll look at your business credit score. Maybe they give you 75 Gs, right? It's at 30%. But we're not talking about the kneecap loan style stuff. And none of that's showing up on your personal credit. So this entire time, I'm staying 750. I'm staying 770.
And there's been no dings to your personal credit?
No dings to your personal credit, right? You've got one inquiry. That's the only difference. And why would you carry any personal debt when you have these other $45,000 limit, $50,000 limit, $25,000 limit business credit cards? You would be a fool to put anything on your personal credit because you need to steward the whole next year, right?
Well,
so instead of the debt spiral, number one, but just to finish, debt spiral 1, I'm a 650 at the end of the year. The second one,
the success story.
Right. So I've got some business credit card debt, but this is the debt that's going to be incurred, but none of it's showing up on my personal credit. I didn't take any equity out of my house. And what's the difference? And so now you're also showing all this activity on this business, which makes you a shoo-in for an SBSS score. Now you can get into the SBA system. You can show legitimacy, right? SBA loans are SBSS score. You have to have business credit to be able to get them.
Yes.
Right? Trump has made major changes. They're going less and less by local little, do a business plan, grants. That's all going to the wayside. Do you have a score? 50% is personal, 50% is business credit. That first year, not only did you spend that time keeping your personal credit scores fantastic, you built your business credit, You've got extra, 10 times the funding capabilities. Now you're a shoo-in to be able to get an SBA loan. As a startup, you barely even started. You're in your first year. You're selling, $5,000 worth of widgets.
Yep.
Now you get $200,000 because you got an SBA score. That's fantastic. File your first year of taxes. You get into the system, and once you get your first SBA loan, now you can get some more. So it's a completely different ballgame. It's the difference between, a lot of times more than magic. They say we're in Orange County, so homes, we as we know, Newport, stuff like that, $3 million, right?
Yeah.
It's the working class versus the asset class.
Mm-hmm.
Big difference. People are sitting on the equity in their home making a couple $100,000 a year here in Orange County, right? So if you're a business owner, it's the same fundamental concept. It's just understanding what you need to do. And it's the same thing for a couple $100, literally a couple $100 of competency and putting some foresight into where you're going to be a year from now.
Yeah.
And that same person is going to be, now that's one scenario. Let's say you're a truck driver. You're a good old boy and you pay cash for everything, but you want 3 or 4 trucks and your personal credit sucks.
Yeah.
There's so many different reasons why business credit is the number one thing that you need to do when you're an entrepreneur, right?
And does it just extend to credit cards or does it extend to vehicle financing?
It extends to everything. So that's when we go into the conversation about no PG. So the microphone that you're using or this studio, nothing in here has my social on it. Nothing, the cars out front, they don't have social on them, right? The computer that you're using and
really?
Everything in here. The lease doesn't have my social on it, right? There's no need for that. You'd be a fool to do that. The business has got a solid enough credit. When a large company that's got 100 employees that go to lease a building, buy a building, get some trucks, our clients are going all day going to get forwards. And these are guys with bad personal. Their wife took them to the cleaners. They did this, they did that. And you showed me a picture, yesterday of a guy with a new F-350. That's building a business. That one-man show, that guy that wants to stop working for someone else, but he needs tools, he needs equipment, he needs stuff. So these are 2 different people.
Yes. One
of them is a startup methodology and what the advantages of business credit are for that person with decent personal, right? The other one is someone who's he's been a trucker for a long time. He's a 1099, he's an entrepreneur, he's got a corporation, that's how he's paid, but he wants to be able to get a new truck, he wants to do some things. People squander most of their resources on interest. They squander most of the resources on just things that they shouldn't have to. And it's the difference between the different classes of knowledge. Now, what's going on though? YouTube videos are taking that core valuable concept. And it's the same thing. Be a billionaire and flip homes.
Yeah.
Right? Sign up for my course. Is that going to happen? Right?
There's a million scams.
There's a million pieces of nonsense that are out there. Now, if you knew somebody who owned 15 homes in Orange County and that's what they did, and you said, hey, could I shadow you? Can I learn a couple of things? And you're like, I don't have time for you, but just pay attention. That's different, right? Then mastermind class for $2,000, sign up for my videos.
Join my community,
right? We've been selling memberships now for 25 years. People that are selling memberships, they weren't even born yet, right?
Yeah.
So that's kind of the gist of our program. What I found though is information is useless without somebody there to implement it. So that's why you get a program that's less than some videos that are regurgitated stuff that we did a while back. And you get an actual person like Amanda. She's been looking at business credit reports for how long?
20 years, almost.
Wow.
So I'm pretty sure when she looks at a DMV report, she knows she's looked at more business credit reports than anybody.
Probably. And how do you stay up to date on everything? I mean, you spoke a little bit about the new Trump initiatives, taking SBA loans away from local, sort of buddy, here's my business plan.
The ambiguous,
and making it into a SPIF score and actually turning that into a federally organized thing. Can you talk a little bit about that?
Our clients, we listen to their stories. They bring to us, like, as he was talking, I was actually thinking about a guy. He's actually the middle guy. He's mid-6s on his personal credit, but he's an auto shop that has great revenue, but his files were a mess. And he came to us. He had a $2,000 Capital One Spark card. And that was the one that he was talking about, reports on the personal credit.
Wow.
Okay. And he tells me one day when I called him, he goes, I don't know what you guys did after we cleaned up his files and everything, but Capital One just raised my card to $20,000.
Wow. So he had a business credit card already for only $2,000, successful auto shop, doing large amounts of revenue. And just because the files were messed up and you guys put them together, you 10x'd his credit.
And that's what we talk about all day long is 10xing with
So you're
business
asking
credit.
where the information's coming from. It's not from reading somebody else's blog post that's just AI nonsense. It's from actually what's working.
But here's the kicker. Here's the advice for the guy. Because that reports on his personal credit, do you know what my advice to him was?
What was it?
Don't use that card.
Really?
Because you're going to go max out that card, your score that's struggling in the mid sixes, that you're trying to bump it just a little bit to get to that 700 range.
Mm-hmm.
You're never getting there if you go max out that card. Right. You sit on that card,
right,
and then you keep building the business credit, and then you go get the Chase Inc. card.
Right.
And that Chase Inc. card doesn't report on you personally.
So Chase Inc. is strictly for businesses.
Well, they're both business credit
guarantees.
cards. It's just that the number one card that people go get is a dumb card.
There's a difference between if it reports on your personal credit and doesn't.
Yes.
So the Capital One Spark card reports on business and personal. So when you max it out, you have that debt on your personal
credit. So he
credit.
takes that $20,000 card and he puts $5,000 on it. He drops 20 points personally. It's just simple as that.
Because that adds to his debt to income ratio.
Exactly.
On his personal. It's a personal credit card with a business name on it.
So is this something the banks are trying to hide?
No, it's just the way that it's an anomaly. It's just one of a million data points about why business credit. And so to kind of get back to like, how does she know? It's boots on the ground.
Mm-hmm.
Yeah.
It's dealing with people on a day-by-day basis, that seeing what's actually happening. And so that's when you go into the source of business credit, right? So if she's looked at 25,000 business credit reports and kind of what's the navigational concepts and what's working.
Yeah.
We'll get into that.
And it's the frustration with the YouTube University is
Yeah.
we have all of these people out there purporting to be experts because they did it one time for themselves and then like this is going to work for everybody, and it works for nobody.
And most people are not that dumb that they're going to see a guy that's, borrowed a Lambo or some Bentley with some spinners and I got $1 million in business credit, do it my way. Most people are not that dumb. It's kind of the middle of the road people that purport to be experts. Right. And where the difference though is they don't have any baseline for concepts. They're just literally either Googling it themselves or done it for one or two people. And then they're saying that they have this information. How could you, if you've not built the business credit for tens of thousands of clients, where's that information coming from? How do you know? You're just getting it from the internet and you're just packaging
no data
it.
points.
You have no data points. And
no
so
case studies.
we don't do the low end vendors. We don't do all that little stuff. We don't do all the little, because there's a whole industry of affiliate links that are just kind of go nowhere. Right.
Mm-hmm.
And so it gives everybody a bad name because it's like, I've been trying to build business credit and I can't get a gas card. I've been doing this for 6 months. Yep. Or you'll hear the same thing. I've done most of the work. I've got 15 vendors and blah, blah, blah. And they look at it and you got 3 files. You got one thing reporting. It's a bit of a joke. You got a PAYDEX score. Oh boy. Right. Anyway, to get back to, and so I've been listening to that my whole life.
Yeah.
And so when I have a question about what's the underwriting criteria, there'll be someone, a specialist, a technician, that'll say, well, here's why we do the Home Depot before we do the da-da-da, and here's why we get this, and no, the CIT bank does a different underwriting criteria, and I'm going to need one more trade on Equifax in order to get this, and blah, blah, blah. It's from the source.
Yeah.
Right? And so there's no one else that's a service that's doing that right now, right? Even our biggest competitor that we alluded to, they look to us for the content and for the information, right? And now the other parts of the industry, now you have the same pie, and there's other anomalies to this. The scammy stuff, pay us $5,000, we're going to get you big money.
Yep.
So remember, there's MCA loans, there's credit card stacking, there's this shelf corp, we're going to get you big money if you do this kind of da-da-da-da thing, right?
And that's a shady business
Yeah,
practice.
and so what they're doing though is they're all hiding behind, like for instance, MCA.
Yeah.
Right. So there's a million different business names and brokers that are out there, and you can make a Fiverr website that looks phenomenal, right? Mm-hmm. You're taking a template, you're cutting and pasting it, you're throwing up 3 reviews, and you're saying, major corporation funding platform, we're amazing, da 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 da, right? Mm-hmm. They're just like a lead gen, and they got little kids spamming like you like crazy once they get your information, and it's going to somebody else. And so then the underwriting companies, the ones that the people hate after they've taken the loan, they're hiding behind that facade, right? We'll go into all of it, right? But there's just multi-levels of market. It's like an MLM kind of an industry, right? So then that goes to another broker and that goes to another person, et cetera, et cetera. Everybody's got their hand in the cookie jar fleecing the small business owner.
Yeah.
What's the smarter move? Well, that same person, if they built business credit, could have logged into their Chase account and it could have said, you've been pre-approved for $100,000 on top of your business credit card because you stewarded your Chase Inc. credit card well, right? At prime rates. Now, we've had ex-employees that are bankers, right?
Mm-hmm.
They know quite a bit more than the bankers that are in there. But the truth is, the person working in the bank, the business funding manager or the branch manager, they're doing the same as everybody else. They're punching in information. The computer's telling them, is it approved or not? They're not going to give you the fundamentals and what Fair Isaac's looking at for the algorithms to get the larger approvals, right? It's simple. It's the correlation of business credit and personal put together.
Yep.
And so we go so far over and above the little kind of layman, slapstick dance of a couple net 30 accounts to a place, and we'll take them as far as they need to go. They can go as far as us. They can get $1 million or more in business credit. Keep your personal credit decent. Why would you not want to do that? Couple that with some revenue, 6 figures, and then you're good. All right. So the game plan there is the same for everybody. And so her job and her responsibility has always been, what's the smartest thing they can do now, the most efficient thing they can do now, because our price is so stinking affordable. It's ridiculous, right?
It is ridiculous.
Yeah. So
I'm surprised you haven't doubled it.
Well, I mean, there's, it can be a challenge at times. You have clients that they say, hey, I paid whatever it is, and I should be able to call 3 times a day. I got my DUNS number. I'm super excited. I want to call. It's appointment based. It's hyper efficient. You're speaking to someone who's competent. It's like you're getting attorney level, paralegal level competency at a price that's cheaper than an ebook or some, incorporator's little side hustle, right?
That's an hourly rate for some big firms. But I think it speaks to the fairness of the company and the fact that you're running it in a way that helps people. Yeah. And not just fills your own pockets, focusing on the little guy, focusing on the blue collar business owner who's didn't get a finance degree, right, but went to the school of hard knocks and is running his trucking business. Yes. Where getting for him setting up the DUNS number is going to be a complicated task. So she's laughing because it is. She's laughing.
Do you have opening their email can be complicated at times, but you know what? They're fantastic. They do a great job on concrete, fixing that plumbing. They know exactly what they're doing. We wouldn't have a clue. He goes in there and he gets the job done. The light turns on and it works every time.
We have some of the nicest old guys that don't know how to attach a document to an email, but
she works with them.
But that's what we're here for. We help walk them through, and it's not just the business credit. It's actually like technical aspects of life that they need help with too.
Jordan, this is your second day. This is kind of the bar that we set for the type of hires that we have. And so we would love to have you join us as a member. If you want to reach out, you can even speak with Jordan directly. So thank you for your time today.
Thank you, Mike. Yep.